This is Trade Alive with IUX, where markets come alive and trading gets real. Let's go live.
This podcast is brought to you by IUX Trading Platform, elevating your trading experience.
Hello, listeners, and welcome to the IUX podcast, a part of Trade Alive, brought to you by IUX Education and IUX Trading Platform. We help you explore the lives, lessons, and legacies of the world's greatest traders. For the last decade, if you asked anyone on Wall Street what artificial intelligence was supposed to do, they would all give you the exact same answer. They would tell you that AI is the ultimate crystal ball. The traditional approach to AI in financial markets has almost entirely been outward-looking. We have spent billions of dollars building supercomputers designed to do one thing: conquer the chaotic external environment. We built machine learning models to predict price action. We fed them vast, incomprehensible data sets to mine for faster insights. We trained them to read satellite imagery of retail parking lots, to parse through central bank speeches, and to forecast macroeconomic shifts before human analysts even had their morning coffee. And yes, AI excels at this. It can process market sentiment, digest breaking news, and execute trades in milliseconds. It has helped massive institutions make incredibly smart, aggressive moves. But here's the reality check for the year 2026. If you are an individual retail trader, having an AI tell you what the S&P 500 is going to do in the next 5 minutes is no longer your biggest advantage. In fact, it's old news. The most significant, earth-shattering breakthrough for individual traders this year is not outward-looking. It is entirely, relentlessly inward-looking. We are entering a radical new era of financial technology. We have finally realized that the weakest link in the trading ecosystem is not the speed of our internet, and it's not the accuracy of our indicators. The weakest link is the person sitting in the chair. Human execution is notoriously, inevitably flawed. We are biological creatures trying to survive in a digital, probabilistic environment. Our decisions are driven by deeply ingrained cognitive biases. We suffer from screen fatigue. We are victims of emotional volatility. We experience the crushing weight of FOMO, or the fear of missing out, when we see a chart rocketing upward. We experience blind, irrational panic selling when a position dips just below our comfort zone. We can have the greatest strategy in the world handed to us by the smartest algorithm in the world, and we will still find a way to ruin it with our own psychology. But what if technology could fix us? By bringing pure emotional detachment to the analytical process, technology is fundamentally shaping the future of investing. This is where a new breed of machine learning models comes into play. Models specifically built for trading performance analysis. Today, the paradigm has completely shifted. Instead of asking your AI, "What will the market do next?" the most profitable, productive question you can possibly ask is, "What mistake am I about to make?" In this episode, we're going to explore how artificial intelligence now acts as an objective, unforgiving mirror. We'll dive into how it diagnoses your hidden behavioral patterns and how it preempts your fatal execution errors before they have the chance to erode your hard-earned capital. Welcome to the future of discipline. Let's begin. So let's break this down to its absolute core mechanics. How exactly does a string of code predict a human emotion? How does an AI anticipate and fix a human execution error, effectively bridging the massive gap between flawed human psychology and perfect algorithmic efficiency? It sounds like science fiction, but it is happening right now on retail trading terminals across the globe. It operates in 3 distinct, highly sophisticated phases. Grab a pen, because understanding this workflow will change how you view your own daily routines. These phases are data ingestion, pattern recognition, and active intervention. Let's explore phase 1. Phase 1 is where the machine learns your digital DNA. We call this the data mirror. In the old days, keeping a trading journal meant writing down your entry price, your exit price, and maybe a little note saying, "I felt nervous." That is obsolete. Today, a trader connects their brokerage account directly to an AI-driven analytics platform. Unlike humans who forget how they felt 3 hours ago, AI can process vast amounts of historical and real-time data 24/7 at unprecedented speeds. But it's not just looking at your profit and loss. The system ingests deep metadata from every single trade you take. It records the exact time of day, the hold duration down to the millisecond, the specific instrument volatility at the moment of your click. It measures your entry and exit slippage and your exact position sizing relative to your total equity. Let me give you an example to make this real. Imagine a trader named Sarah. Sarah trades the NASDAQ Open every morning. When the AI ingests Sarah's data, it doesn't just see that she bought 5 contracts at 9:35 a.m. and lost $200. It records the precise context of what happened. It records that Sarah took this trade after only 3 hours of market inactivity, suggesting lack of sleep or overcharting. It records that the VIX, the volatility index, was spiking above 20 at the time of her entry. It records that her mouse hovered over the buy button for 14 seconds before clicking, a metric of hesitation. The AI is building a massive database of Sarah's habits. It doesn't just record what happened, it records the precise environmental and psychological context of what happened. It is building the baseline. Once the AI has built this massive database of your metadata, it moves to phase 2, pattern recognition. This is where the magic happens. By applying advanced machine learning models designed for trading performance analysis, the system uses predictive analytics to identify your invisible behavioral loops. It searches for the cognitive biases that are entirely impossible for the human eye to catch in real time. Let me give you a highly specific example. Imagine a trader. Let's call him Alex. Alex thinks he has a strategy problem because he keeps losing money on Thursday afternoons. But the AI looks at Alex's data and sees something completely different. The AI discovers a pattern. When Alex experiences 2 consecutive losses in the morning session, his psychological profile breaks down. The data shows that after those 2 morning losses, Alex's afternoon trades exhibit a massive 40% increase in position size, combined with a 60% decrease in hold time. Alex isn't trading a strategy anymore. He's throwing Hail Mary passes. The AI diagnoses this not as a technical failure, but as a specific emotion-driven execution error, revenge trading. Alex is subconsciously trying to win his money back as fast as possible by risking more and cutting winners short out of fear. Or consider another scenario. The AI might find that a trader consistently enters positions exactly 5 seconds late during high volatility news events. The trader thinks their internet is slow. The AI knows the truth. By cross-referencing the volatility spikes with the delayed mouse clicks, the AI diagnoses the error as hesitation, a paralysis driven by the fear of being wrong. The AI illuminates the blind spots. It strips away the ego and reveals the raw, unfiltered truth of your psychological flaws. But here is the harsh reality of the financial markets. Prediction is entirely useless without correction. It doesn't matter if you know you're a revenge trader if you still go ahead and blow up your account anyway. Awareness without action is just passive observation. This is where phase 3 changes the game: active intervention. Because AI operates completely free from the biological cocktail of fear, greed, adrenaline, and fatigue, modern AI tools now act as dynamic, emotionless risk managers. They sit on your shoulder, watching your every move. If the predictive model detects the precursors to one of your known errors, for instance, the AI sees that Alex has just taken his second loss of the morning, and it watches his mouse hover over a high-leverage position, it steps in. Before Alex can click buy, the AI can trigger a cooling off alert on his screen. It forces him to pause. But it goes much deeper than just alerts. In more advanced institutional-grade setups, available to retail traders in 2026, the AI can seamlessly switch to automated algorithmic execution to handle the trade properly. If the trader is severely tilted, the AI can temporarily lock the execution terminal, physically preventing the trader from placing a market order for 15 minutes. Or it can dynamically reduce the maximum allowed position size for that specific session. You want revenge trade? Fine, but the AI restricts you to risking only 0.1% of your account instead of your usual 2%. It actively fixes the error in real time. It removes the trader's ability to execute impulsively, serving as the ultimate fail-safe to ensure strict, unwavering adherence to the original trading plan. Phase 3 is where the magic happens: active intervention. Prediction is absolutely useless without correction. Because AI operates completely free from fear, greed, and fatigue, modern AI tools now act as dynamic, emotionless risk managers sitting right next to you. They are the ultimate seatbelt. If the model detects the precursors to a known error, it steps in. Let's revisit Sarah, our revenge trader. It is a Tuesday. Sarah just took her second consecutive loss of the morning. She is frustrated. Her heart rate is up. She walks away, gets a coffee, and comes back at 2 p.m. ready to double her position size to make it all back. But the AI is watching. It recognizes the exact environmental setup for her revenge trading loop. Before Sarah can even click the mouse to open that high-leverage position, the AI intervenes. It triggers a mandatory cooling-off alert on her screen. In more advanced setups, the AI can seamlessly switch her to automated algorithmic execution, taking the keys out of her hands. It might temporarily lock the execution terminal for 15 minutes to let her adrenaline drop. Or it might dynamically reduce the maximum allowed position size for that specific session, physically preventing her from increasing her lot size by 40%. Or think about David, who hesitates during news events. The AI, knowing his flaw, can be pre-programmed to take over the execution. David sets the parameters, and the AI executes the trade at the exact millisecond the data is released, completely bypassing David's 5-second fear delay. The AI fixes the error by removing the trader's ability to execute impulsively. It acts as an unbreakable physical barrier, ensuring strict adherence to the original trading plan. Let's bring this all together. The integration of AI into a retail trader's workflow is fundamentally shifting the very definition of discipline. For decades, trading gurus told us that discipline was about sheer willpower. They told us to just stick to the plan. But human willpower is a battery. It depletes after a long day of staring at charts. In 2026, discipline is no longer about relying solely on willpower. It's about leveraging technology to build a customized, automated guardrail system around your psychology. By utilizing machine learning models for trading performance analysis, traders can finally illuminate their blind spots. We are effectively bridging the gap between flawed human psychology and algorithmic efficiency. The AI acts as an impartial coach, a coach that never sleeps, never experiences fatigue, and never falls victim to FOMO or panic. Through its continuous, relentless cycle of data ingestion, pattern recognition, and active intervention, it does something miraculous. It turns subjective, messy emotional errors like revenge trading or hesitation into objective, fixable data points. Ultimately, the market cannot be controlled. You cannot force the NASDAQ to go up, and you cannot force gold to go down, but your execution can be controlled. Embracing this inward-looking technology ensures that your biggest liability, human psychology, is constantly monitored and systematically improved. By bringing pure emotional detachment to your analytical and execution process, AI allows you to trade not just with a better strategy, but with absolute precision. So, my question to you is this: are you still trying to predict the market, or are you ready to let the machine predict you? If this episode changed the way you view your trading psychology, make sure to subscribe to the podcast, leave a review, and share this with a trader who needs to hear it. Until next time, protect your capital, trust your guardrails, and execute with precision. See you in the next episode. Goodbye.
You've been listening to Trade Alive with IUX. Ready to put these insights into action? IUX is here to power your next winning trade.